Hello, Jim here. Selling options is a great way to make some extra income. Today, I want to talk about all the many income streams that I have by selling options. And at the end of the video, so stay till the very end, I'm going to share with you my trades from February and how I did overall for the month. Let's go ahead and jump right in. The Fed came out yesterday and pretty much confirmed that they are going to have three rates this year. And that was some good news for the market. The market's been up today. It was up quite a bit yesterday. And that's probably going to continue. Are we going to have just up days? No, I still think we're going to have a lot of volatility and we're going to have up days and down days. We are coming to the end of earnings season. So I think things are going to calm down a little bit. We'll probably go more sideways, but probably trending up. And then maybe when the next group of earnings come out, we may bounce around a little bit more. But overall, I think we're probably in a true bull market, and that'll may continue through the end of the year. At least I wouldn't be surprised if that's what happens. So let's jump into the main content for the video. As always, I'd like to reiterate every week, it starts out with picking good companies or good securities. Companies that are low on debt, have good profitability, have some good growth, maybe not great growth. If they're a dividend payer, they don't just have a high yield for dividends, but they're growing their dividends at a nice pace and have plenty of cash to pay their dividends. So I like to reiterate that because the mistakes I've made or the trades that have gone against me typically always relate to picking the wrong companies. So now, I also like to define myself. I've been an income investor for most of my life, and it was primarily dividends. I'm now describing myself as what I call the new income investor, and primarily because with selling options, it adds so much more, income to your life that you didn't know really ever existed. And now with the stuff I've done related to Fidelity and doing most of my puts at Fidelity, I also have quite a bit of interest income, which I didn't have in the past. Schwab, I think, pays like 0.45, but before the rates came up, it might have been like 0.25. So it's kind of nice to have the higher rates. And in a way, I'd prefer the Fed to keep them higher so we can continue to have those kind of income streams. But I do look at myself more as a new income investor. It's not just dividends, but it's also interest and selling options, both puts and calls, which I think is important because a good balance of puts and calls sets you up nicely for the market. So when you have major up days like what's going on this week, a lot of your puts become very profitable and you can close them. And then when the market, takes a dive, the reverse happens. Your calls become very profitable. And you can close them early, and you could switch depending on what direction the market's going. You can, if the market's going down, you could sell puts. If the market's going up, you can sell calls. For those of you who may be new to what I'm talking about, calls and puts, what's amazing with earning premiums from selling options is the fact that people will pay you money to buy your stock. So you can actually sell what's called an option contract, a call where someone will pay you for the opportunity to buy your shares. And the reverse is true. You have a put where someone will pay you for the opportunity to put those shares to you. So you can actually earn income kind of on either end of the trades that you typically would make. In the past or many years ago, I would just buy stock or sell stock, and then I would enjoy getting the dividends each month. But now, mostly I sell puts versus buying stocks. When I identify a stock I want to own, I typically will sell either a cash secured put, and by cash secured, it just means you have enough cash to cover that put. I don't ever do what's called naked puts where I don't have the cash. Or I'll do vertical put credit spreads in my accounts where I might have less cash and the account may be mostly invested with dividend paying companies. In those cases, I'm just trying to earn some extra cash to kind of improve my returns. So, and what's amazing is then you end up with all these different income streams, and you can even break them down. I keep saying premiums from selling options, but you could say premiums from call options, premium from put options. And now with the higher interest rates, you can also earn nice nearly 5% interest on any of your cash that's dedicated to your puts, at least if you're at Fidelity. And you can do this in your retirement accounts. So, so you've got income from your calls, income from your puts, then you have dividend income, interest income, so in a way, 4 income streams, which can be a significant amount. And again, at the end of the video, I'm going to share with you what my income looked like in February. I'm going to go over my trades and talk a little bit more about that. But it can be substantial, and and it can be pretty consistent. I don't trade a lot. I trade usually 1 or 2 times a day, probably more like 1 time a day. Some days I don't trade at all. And that's what I like about it, because I'm still consulting, doing software programming. So I don't have all the time of, to be on the market all day. I have to kind of get on and then get off. And a lot of times I'm only on in the morning for maybe an hour, and late in the afternoon, 2:30, 3 o'clock, for again, maybe another 30 minutes, maybe an hour, but usually closer to 30 minutes in the morning and maybe 30 minutes in the afternoon. Now, what's also worked for me is I've set goals along the way. So if you go back and you watch my videos from early on, I set I think $1,000 goal for my first time, or one of my first videos. And I've increased that over the years. I like to do it more in a dollar amount than I will talk about what kind of return you can earn with your accounts, but I like to do it at more of a cash scenario, especially when you have a budget and you know what you need to earn, by setting a $1,000 a month goal or a $2,000 a month goal, and then breaking it down by week and then by day. So if your goal is $4,000 a month, well, then $1,000 a week, and then you're talking $200 a day, and that really makes it easy. And then starting small. A lot of people ask me, well, how much can you make? And, they want to make that from day one, but it is a learning process, and it is slow and steady, learning the right way to trade options. Because I probably in 21, when I first got started, I probably had 100 trades that all went my way and I didn't have any losses. Then I believe into 22, I had a couple of losses. And that just comes with the territory. You're really not learning if you're not making any mistakes along the way. So I encourage you, if you're looking at doing this, start small, have some early wins, and then really learn the semantics and learn the basics, and then become more advanced. It's kind of like anything else. If you learn the right way, you can really do well. And then also consistency. It's sticking with it and making, like I said, I try to make a trade a day. And once I reach a goal, then I usually will stop trading. Same thing with a week. If my goal is 1,000 for the week and I reach 1,000 on Thursday, well, I may not trade on Friday. Or if my goal is 200 a day and one trade nets me 200, again, I'm done for that day potentially. Sometimes I'll do a little bit more if the market's kind of going through a crazy time or something and there's crazy premium. Sometimes I'll do a few more trades. But usually I'm on and off, and I'm consistent with that. I kind of, from week to week, my trades don't look radically different. Now I'm trying to improve on them. I'm also trying to improve my guidelines. And what you may wonder, what do I mean by guidelines? So when I sell an option, I identify a type of strike based on my delta. I also identify what kind of expirations, do I want to, or I do want to typically keep them within 90 days, especially for puts, probably more like 45 to 60 days. And I set those kind of guidelines for each type of security. So I do one group of guidelines for value companies, another for growth companies, another for ETFs, and so on and so on. And that tends to work out well. At first, I just had one group of guidelines. I think I used the same delta on both sides, and I didn't have much in it, but that's part of what you learn along the way. So being consistent is really important, but consistency with improvement too, and then learning from your trades. I like to slow down and look back at what happened the previous month and see where I can improve going forward. And that's what I typically do. And then the other big factor is patience. People need to be patient. Sometimes when you look at your options in your account, it looks like a big loss, but it's just based on the bid and ask of some future date. So even though you may still be way out of the money, it looks like a big loss and people will panic and get out of the trade. I've had numerous times where that has occurred and the stock price goes back up and suddenly it's out of the money. So having patience can usually buy yourself enough time and can get you out of trouble. A lot of people don't realize, like with assignment, early assignment is fairly rare and you can identify when it's mostly going to occur. I share a lot of that kind of information about, when you really need to worry about early assignment, how deep do you need to be in the money? How close do you need to be near the expiration? What's the likelihood of being early assigned? And I share all that kind of information with my memberships. If you want to learn more about my memberships, I'm not going to go into detail about them. I have 3 memberships that hopefully each one caters to a certain type of person. So take a look. It may be worth your while. I also have links related to Seeking Alpha. I am an affiliate, so if you're curious about learning about Seeking Alpha, they give you a week for free, and then I think you can get a discount. I think right now it's like $179 versus the $199. So yeah, take a look if you're interested. And as always, please subscribe, hit that like button. I do like to communicate with people, so leave comments, especially if you disagree with something or you have a question, you don't understand what I'm meaning. So I encourage you, take a look below. It may be worth your while. And then something I talked about in previous videos is having a good balance of calls and puts. I probably have more puts, but not much more, or not many more. It's pretty close to 50-50. It may be 55-45, like 55% calls, or 45% calls and 55% puts. And it works out, again, really well for me. When the market is way up, then, puts become profitable, and I primarily might be rolling calls, and vice versa. When it's a bear market, I might be selling puts, and then the calls become very profitable and I may be closing calls. So I don't know that necessarily one is better than the other. I think it's a combination of both. And then with my calls, I typically like to double my dividends. So if I'm earning 3 or 4% in dividends, then I like to double that and earn like 6 to 8%. So that's kind of the basics. This next part, we're going to jump into my February trades, and I'll share with you some actual numbers, what my February looked like, both interest, dividends, and then also the different types of premium related to my option trade. So let's jump into the next part of the video. Okay, I've opened up my February trades worksheet. This is pretty much my planning worksheet. I just took the first one from the month of February and did a cut and paste of all my trades into it. So this is literally all the trades I did in February. At the top, it's got my weekly goals. My weekly goals are 1,600. My monthly goal is 6,400 monthly. Here you can see I did 6,705 in February. So that's the total premium that I brought in from both selling calls and puts. And we'll talk about some of my trades. I'm not going to go into a lot of detail, but you can see I trade a pretty diverse group of companies. You'll see a lot of YouTubers will trade the same companies over and over, and most of their videos, are Palantir or SoFi, and they seem to be the same companies. I'm kind of very different compared to that. I trade in lots of different companies, and most of the companies I own, I sell covered calls on, and I've got a pretty good size watch list that I again share that with my membership, that I look at on a daily basis to determine, are there any good values out there that I want to sell puts on. So also I sell a lot of covered calls in Coca-Cola. So the first trade I did was Coca-Cola. I did a covered call. Then the next one is XLU. The ones that are coated in green did especially well, so I'm going to talk a little bit more about those in detail. But XLU is the utility ETF. It was in my or is in my Fidelity Roth. It's a vertical put credit spread. I did a 60-52, so an $80 spread. I took a little bit more risk. I did a 37 delta, mainly because I don't feel like it's overpriced. At that time, it was 61.34, and I felt like that, at that price, it pays a pretty good dividend, and it's not crazy high like a lot of the other parts of the market are. And then I brought in 213, since it was an 18 or an 8 spread. It required 1,600 in capital, but then you subtract the 213, so that's why it's 1386. And because the expiration was in 77 days, it was over a 70% return. So one of my better trades. Next, it's Palantir. I do like Palantir to trade with, but again, it's just one small piece of my different accounts. I did a covered call so I did have some Palantir. I did a poor man's covered call. I bought 4 contracts, and now I'm selling covered calls on them, and that's what this is. So I believe it was 4 covered calls at $12 expiring January of 25. Again, with the idea of doing a poor man's covered call. So I bought those at 12, and then this was the first covered call that I sold against it. And I brought in $218, and it was like an 11% return. I believe I said that correctly. Yeah, 11% return. Again, because it's a covered call. And the reason you would do a poor man's covered call is instead of paying, the full amount for the shares, I just had to pay the premium to purchase those calls. So when they were $12, I believe they were $4 or $5 in the money at that time. It was like a 0.8 delta. But that trade's worked out well. I mean, Palantir has gone up into the high 20s, and now those, 4 contracts I purchased have done quite well. This is ConocoPhillips, and it's a cash secured put in my IRA Fidelity. You'll notice I trade in pretty much all my different accounts. I did this at 110, expiring on 216. And I brought in $232. It again was like almost an 11% return, mainly because it was it being a cash secured put, the required capital is pretty high. IWM, the Russell 2000, I've had a lot of success with it over the years, and this was a good trade. I did 175, 165. Now this is way out of the money. Vertical put credit spread. And it had like a 48% return. I brought in 178, but I believe this is because, 74 days DTE for expiration. Actually, this was a roll, so I rolled it from 216 to 417 and brought in some pretty good premium. Not the best, but pretty good. Now IWM is so much higher that I still have that trade, and it's gotten really, really profitable. I'll probably close it here. This is DocuSign. My primary client, we're building a competition to DocuSign, so I wanted to sell puts on it so I can keep track of how they're doing. So this is a cash secured put at $45, expiring on, I made the trade 6th of February, expiring on 4/19. It was 51.62 at the time. And I brought in some really good premium. I was surprised how good premium it had. And the, capital required was pretty high because I did 2 contracts for this, and it was just shy of an 18% return, 17.52. Next is PG. I've owned Procter & Gamble for a long time. I've had the same covered calls, and I just keep rolling them. So I rolled again. I rolled it from 160 to 165, and from 419 expiration to a 117 expiration. Again, I own these shares. It's only 1 contract, but it still brought in some big money, $493. which translated into a 6.92 yearly return, which more than doubles my dividend. You'll hear me say many, many times that my goal with covered calls at a minimum is to double the dividends. Typically, I can do a lot better. This was definitely a lot better than doubling the dividends. I think they pay like a 4.5 to 5% dividend. So just in dividends and with covered calls, you can earn like 11 or 12%. It's pretty substantial. Devon is another good company. I've sold covered calls in it. I did have 400 shares get assigned to me, so now I'm selling covered calls on them. This had a pretty low delta of 26, and I brought in some pretty good money, $204. Not the best return, about 8%. And again, these are covered calls, so I'm again trying to double my dividends at a minimum. Cisco, another. I also own a lot of Cisco. I think I own over 400 shares, but I also like doing vertical put credit spreads. I won't go into detail. I closed this one, so it became very profitable. So I closed it back. And I typically don't spend a whole lot on closing them. Usually, most of them are very profitable. I almost prefer to let it get so cheap that it's kind of a second thought with how cheap it is, meaning I can close it for $15, $20 or something along those lines. Next is CF Industries. This also, I believe, expired out of the money. And this also, I rolled at this point, which since then, I believe it's expired. So I rolled it. No, actually, I closed it. But for this trade, I rolled it and brought in another $197. It was a good 59% return. And it has done well since then. I believe I've closed it just in the last couple of weeks. Next is CVS, another company I like to trade in. This one's in my Roth, but I like CVS. I have one right next door that I'm in there all the time. They are pricey, but I like their Minute Clinic. I use them quite often. A lot of times when I need to pick up some Gatorade for tennis, I'll just stop in there. So I did a 72.50, 62.50, which was pretty close to the current price at that time. I believe it's still about the same. It might have come down. It may be more like 65. Of course, I don't know today. The markets are way up today. It could be above 80 now. But I brought in a lot of good premium, 375. And I don't know what I've done there, but somehow I've must have hit Z at some point and messed up the return. But I think it was a pretty good return. Apple, I've recently started selling Apple now that it's come down a little bit. I did a 165, 155, brought in $191. It was expiring in 94 days. So I did go a little farther out, mainly because I wanted to get a pretty low strike price for Apple. Now, here's another one that's marked green because it was one of my better trades. This is SCHD, my favorite ETF. It pays like 3.6, 3.5, something like that, dividend. And I've owned it a long time. I like to sell covered calls. So this one I rolled. It was a 75 strike price expiring on April. And I rolled it to 116.26 and upped it to $78. So I did go way farther out. This was a leap to be able to bring it up, but I also brought in a lot of cash, which is nice, over $553, which is a low. This is probably one of my exceptions with the covered calls because it is lower than, doubling the dividend. So this is one exception to the rule. And then ED, this is Con Edison. This one's kind of unique. This covered. I've owned them a long time, and I've had this covered call going on probably 3 years. It's been in the money. It seems Con Edison seems to jump from like 83 to 90. So I just keep rolling it. I roll it probably every couple of months, and in this roll, I rolled it from 517 to 816 for the expiration, and I kept the same strike at 85 and brought in another $257. So it turned out to be a pretty good trade. Now, one of my best is Square. Square is one of the companies that's doing really well. It's definitely a growth company. And I rolled Fidelity IRA cash secured put, two of them, and I rolled them from 315.65 to 517.65 and brought in $449. And it was like a 14% return. The reason I noted these past two, the 449 and 553, is just how much cash it brought in. And then Twilio is another one. It hasn't done as well lately. I think it had a mixed earnings report. And also, I like them, but I don't like them as much as Square and some of the other growth companies. But I rolled here. I did one cash secured put, so I didn't take a whole lot of risk with it. But I rolled it to, oh yeah, it was in the money, so they had dropped. So that's what I had to do. I had to roll it. I didn't pick up much premium, but I was able to lower the strike price to 62.50 from 65. And since then, I believe it's come up. It's like 63 now, so it is out of the money. But this was a small return, primarily, again, because I wanted to lower it because I was having second thoughts about Twilio. So it worked out well for me because it allowed me to buy myself some time. Then Zoom, it's one of my favorites to trade. And this was a cash secured put at 61. Zoom had dropped all the way to 60.80. And it brought in $334, and which translates into probably my best return for the month, 86%. So I've been able to find some really good premium for Zoom. And I continue to trade it a lot. I may actually do more trades because they have good numbers. They make good money. They have low debt. They have no debt. They have good productivity. Just a well-run company. They're not very well liked by Wall Street and some of the analysts, but I like them. eBay is similar to Zoom. They're doing well. I rolled them a covered call. I do own 200 shares, so I rolled it from 7.9. No, actually, this isn't a roll. This was selling a new covered call on it. So at 47.50 when it was 43.68, and I brought in $200, which is pretty good, 205. Then Prudential, I closed it. I have traded a lot with Prudential, but recently it's gotten pretty pricey. I may start trading it again. PayPal, it's also been in kind of a low point, closer to its 52-week low, and it's worked out pretty well, and I continue to trade it. So here's a covered call. I do own 200 shares of it. So I wrote a covered call, 25 Delta. It was 57.75 at the time. But I brought in over $300, so really good premium for writing covered calls. And then next I had another KO trade, Coca-Cola, another covered call. This was a new covered call that, I'm not going to go into detail about that. Another eBay, I actually closed the previous eBay trade. I believe that was a cash secured put. Let's see, can we see what I closed it for? I typically list that over here. Yeah, I closed it for $8. So in a lot of cases, a lot of people could do better than me. I like to close them when they're dirt cheap. I keep saying I'd prefer to close it when it's like an 85% profitability, but a lot of times I like it to get really low. I need to do better because I can probably, put the money back to use somewhere else and earn even more. Next is Polaris. It's been near its 52-week low. It's still a good buy. It's a company I like. I wouldn't mind owning some of their, all-terrain fun vehicles. I played with the idea. We've gone in there a number of times. It's one of those fun places to go check out all their inventory and what they might have. But it's been right around 92, 91, 92. And I did a cash secured put. And I brought in I rolled it actually. I rolled it from 315 to 621 and brought in over $400. So it also has a lot of good premium. Now Surge is a new trade that I've just started. I did it two contracts, and it took a dive. It's right now around $4. So I believe it did miss earnings, and it had some other news come out about a government program that it relies on that's not going to be renewed. But it brought in a lot of premium for as inexpensive as it is. So something to look at. Path is another AI-based company, and this is probably one of my other, if not probably one of my best trades, or if not my best trade. It was a vertical put credit spread with a very thin spread, a $5 spread. It was trading at 23.24 at the time. And I brought in $418, which turned into 189% return when you base it on the capital and, only being 51 days DTE. So that's I probably need to look at doing more trades with them. They've worked out really well. Next is Franklin Resources, BEN, and it doesn't have the best number of expirations, but I can usually do okay rolling and dealing with covered calls. And maybe I should look at iron condors because it doesn't move very much either. But was this a roll? Yeah, this was a roll. I rolled it. I actually rolled it down because the stock price had gone down. So I rolled it out from April 19th to October, lowered the strike to 30 and brought in $237 in premium. I'm pretty profitable with them, I believe. I think I have my cost basis over here. Yeah, so it's in the 20s. I think this is 200 shares. So I think my cost basis is like $23. So I did 26 trades in the month of February, which is, like I said, averages a little bit more than one each day. But I have some days where I don't do any. Other days I might do 2 or 3. I also had some shorten weeks. I think we had some days where the market was closed, where it was a 4-day week. So it works out pretty well, doing 1 to 2 trades a day. So here you can see the total, 67.05 for the month. And I did a breakdown. So there were 10 covered calls, 9 cash secured puts, and 7 vertical put credit spreads for a total of 26. So that's 16 versus 10. So I guess it was more like a 60-40 percentage, 60% puts and 40% calls. And then over here, I wanted to show, so this is what my Schwab premium that came out of my Schwab brokerages. So these are my taxable brokerages. And overall, the percent return is relatively low, again, because I'm primarily doing covered calls. And then out of my Fidelity IRA, it was real close to a 1% for that month. And then for my Fidelity Roth, it was a bit higher. So these two combined, probably right at 1%. Now, all three combined is probably like 0.7%. But again, I do have a lot of investments, and it's not just purely cash. But I definitely have had higher months than that, but not bad. That's the breakdown of the premium and how it looked like. So good 60% of it is coming from my retirement accounts. So there again is the 67.05. Then I had 2,042 for the month of February. Now this is a monthly average. So I know how much dividends I make on a yearly basis, and this is just averaged by month. So that's about what I make per month. Majority of that comes in usually every 4th month. So like April, what is that? April, September, October, and December, or something along those, since most of my dividend paying companies are quarterly. And then interest, this is kind of the new piece that I didn't have before. Now that I've moved my retirement accounts over to Fidelity and I'm earning interest on the cash that's dedicated to my puts, I'm earning quite a bit of income. And I've actually confirmed this and compared it to what cash I actually have available. And in total, I'm earning $98.58. A good bit of this is in my retirement accounts. This is in my retirement accounts. And then most of that is also in my retirement accounts. And most of my dividends is in my taxable accounts. But I think I could do more. Like I said, playing with some ideas, some things to change that potentially up that. I believe I could probably on an average do closer to 1.5% versus, I'm pretty close to probably 1% on a monthly basis. So, but being able to earn 98.58, if you look at the previous video, I talk about what I need on a monthly basis, and this is a lot higher. But again, keep in mind a lot of the income is actually in my retirement accounts. Probably at least half of that 98.58 is in my retirement accounts. Probably a little bit more. Probably closer to 6,000. Of nearly 10,000 is in my retirement accounts. Now I did want to add some notes. This is stuff I learned with moving my IRA, my SEP, and my Roths. They all took a little longer than I expected. And while they were moving, also my accounts were kind of locked up. So I couldn't trade. There were parts of February where some of my accounts were literally locked and I could not do any option trading. And I literally had my options moved from Schwab over to Fidelity for those three types of accounts. My SEP was also moved, and this was a mistake. It went right into my IRA at Fidelity. I thought it was going to be a separate account, but it turns out it's not a big deal, mainly because if I end up wanting to do a retirement account with my business, and SEP is, it's a type of account you use with your business, I probably will do something different, maybe like a Roth 401k or something along those lines. So it's okay that it went directly into my IRA. And it also meant I don't have as many accounts. And then the accounts, some of them were not set up completely or not correctly, and I did have to fix that. And then I did have some options positions that were incorrect once they were over in my Fidelity account, primarily like spreads. Sometimes they showed us separate legs, but I just had to call Fidelity and they were able to fix it. They were able to set up those relationships that turned into, two different, a sold put and a purchase put. They did something behind the scenes that turned it into a spread again. So, and they're able to do that quite a bit. So that's what I wanted to share with you. This was a lot. Hopefully I didn't go on too long and bore you to death. As always, leave a comment or two. Let me know what you think and how this compares to what you're doing. So again, as always, thanks for joining me.